Hello my fellow freedom builders and welcome back to the channel. Now today's video is on a request because yesterday I got a request on doing a video on Palantir. And if you have been following the market a bit, you can know that Palantir, this bombshell changes everything. It is going to 500. Palantir is a buy, ready to explode, dominating intelligence. You can retire by 2030, but just by doing this with how many shares. And then we have Palantir Global Head leaves the company. All right, stock buy number 1, ultimate stock, so on and so forth. It is the talk of the town these days. Now, if you don't know Palantir, I can just give you a quick view here and show you that since New Year around here, the stock has gone up by what? 210%, which is very good. You should just have put all your money in here and you could have been well off. Now, what I'm going to have a look at today is quickly, could we have seen this from technical analysis? And then I'm going to have a quick look at the fundamentals, saying, just as in my other videos with Tesla and Netflix and so on, is this a long-term buy? Now, first of all, what is Palantir? Well, if we're looking at Seeking Alpha, and if you don't know Palantir, it is basically a software company using AI to help businesses get hold of their big data. So a huge company that is getting tons and tons and tons of data in, they can use Palantir's products to help them get some structure in this data and use this data to make more money. Now, the biggest clients of Palantir, they are basically paying in the area of $50 million to get all of this set up, meaning they are buying or leasing, renting the software. And then the Palantir is helping the companies, they have consultants helping the companies to set this up, to get the right data in. Big data is not something you just put in a software system and then voila, it all falls into place. No, you really have to pick and choose what data you need, where it is going, how you want to analyze and all that stuff. But that is where Palantir can help. And I really see a big market for the Palantir product, no doubt about that, because we are getting more and more data and it is just exploding. If you're looking at, for instance, Internet of Things, the IoT concept, well, in a few years, companies can get data on what is in our fridge, what we made for dinner last night, and so on and so forth. And, well, basically, we are getting completely flooded by data. So having a company that can get some structure in this data is extremely good. And in these articles, they are describing both the model, and you can read more about them. I'll not go too much in depth with that. What I'm going to have a look at is, in the short term, could we have timed it? That is always nice to know. And then, of course, in a bit longer term time span, do we think this is a good buy if you are going to hold it for 5 or 10 years? First of all, looking in my stock scanner here, we can see that the earnings per share here, they have been losing money for quite a lot of years. But here in 2023, they are expected to come up with a profit. And actually, if we look at it here, the next earnings is on the 7th of August. So that is soon, as in a couple of weeks here, we are going to see if they can actually start producing some profits. But anyway, this is what is estimated, 21 cents in earnings per share this year and 25 next year. So that is very well. We can also see that since 2018 and up until, well, if we're taking the estimates on here until 2024, a CAGR, a compound annual growth rate in the total revenue is around 24% per year. And this could easily continue. The question is if that is enough, because we can also see down here the sales growth is up around 28. So we are in this 25% area as with the growth in revenue, sales, and so on. Now they are making some. If we are looking down here at the operating margins, they are also negative, but we don't have estimates for them, so they will probably turn positive as well. If we're looking down here, the balance sheet, they actually have quite a lot of cash. They have negative net debt, quite a lot of working capital, and that also we can see here the bankruptcy risk is basically zero, because on the Altman C score it is very safe. So for the company, it is actually quite a safe company to invest in. You're not losing your money just right away. It's not a normal cash burning, a very highly leveraged company. Not at all. However, we should remember these numbers here around the 25-ish, because right now we cannot take a value chart because we don't have any positive data. But just before we go into the longer term, let's just have a quick look at the TPI chart. We can see that we didn't get in on the first hike in price here, but then we turned green in the long-term trend here. And what I'm looking for in stocks like this is when we have a green in the long-term trend, a green in the weekly, and then we get a green in the daily. If that is a stock I'm interested in getting into, normally, of course, I would like to have this pink red color here because it shows an accumulation oversold phase. But when I get to a stock that is going up nicely and we get a green all over here, that is a nice buy signal, and that was just below the 10. And then I would probably, and this of course is in hindsight, but I would probably have exited up here somewhere, maybe down here in the 14 and a half area here. Of course, missing some of the upturn here, but making a 40-45% profit on this swing trade. Now, that is all well and good. Right now, we are in a good green uptrend on the long term, on the weekly, and on a light green here. I would like to see that in a dark green, so that might tip it down a bit before I would buy it if I were to buy it. Now, on the long term, if we're looking at the Guru Focus here, we have found the Palantir stock. Oh, sorry, like this. Well, right now, looking at the earnings per share, and I have punched in the 21 cent in earnings per share that we got here in the estimates that we got down here. So we don't have that yet. We don't know if they'll make 21 cents in earnings per share, but let's just assume, because otherwise we would start with a negative number, which would make the discounted cash flow model have some problems. So I'm still going for a yield of around 10% per year. That's what I would like to make on my money. Now, if Palantir were to grow by 10% the next 10 years, and I think it will grow faster, no doubt about that. But then a fair value right now, if I was just going for yield and not really going for this being a hype stock, a meme stock, whatever, something that will get pumped up by the hundreds of YouTubers saying that this is a buy, and always remember to look at the thumbnails with really surprised and excited faces. That is always a good sign. So going in here, saying 10% per year, I want that as a yield from the profit in the company, kind of Buffett-like. Then a 10% growth rate the next 10 years would give the stock a fair value of $3.66 just from this very automated discount cash flow model. Right now, the stock is at around 18, so that would be a complete no-go. Now, I think it will grow faster. What if it grew 20% per year? Well, it's still a $7.23 in fair value, meaning that it is still extremely overvalued. Okay, we know from the numbers here that it has been growing by around, let's just take the large number, 28.5%. I know this is sales growth, but let's just assume that the margins are staying the same, meaning that they will have to, they make kind of the same percentage gain on the bottom line. If we are using around 28% here, then a fair value would be $12.4 instead of the $18 we're seeing right now. And I know you might say, yeah, but this is AI, this is the future, this is whatever, disrupting everything. And let's just have a quick look at that in a second. First of all, we need to get up in the area of 34-35% per year in growth rate in earnings per share before this is just fairly valued. And if you want some margin of safety, let's say 15%, you need to get up at 36%. Now 36% per year in the next 10 years is an insane amount. I know this is AI, I know this is the future of everything, but you know what? So there are other companies that were the future of everything. For instance, I remember investing in 2014 I don't know if you were an active investor at that point, but in 2014, 3D print was the future of everything. Basically, what the analyst said was that all manufacturing companies would go bankrupt if they were manufacturing in the old-fashioned way. 3D print was the things that would rule the future. So, for instance, the 3D System Corporation here went from around $5 and up to $100. And then it went down again to $7. And then it had a peak again here, going up to 56, and now we are back at 9. So that is about a doubling in price in what, something like 15 years, something like that. Just to say, we can find tons and tons of examples here saying that people saying a specific business, a specific corporation, a specific sector would be the new thing of everything. Well, I can't predict that. I am sure Palantir will have a huge and very bright future. However, a company growing its earnings per share by 36% per year over a 10-year period is almost unheard of. Of course, it is there, but you need to be extremely lucky to pick the right stock. I went back looking at, for instance, Amazon. I'll make a specific video about that, but I can tell you that Amazon, you should be very, very picky with your time ranges and data you choose to get a growth rate of 36%, because most of the time Amazon, which is the winner of the online selling space, well, they most of the time have had somewhere between 20, maybe 15, maybe 25% in growth rate, and definitely not 36 over a longer time span. So if you want to invest in the long term in Palantir, and you think you want to buy some good value, then you need to believe that the stock should go up by 35, maybe 40% per year in earnings per share over the next 10 years. Now that doesn't mean, even if you say I don't believe that, that doesn't mean that Palantir can go up by 1,000%, because it can, definitely. It just needs enough buyers to enter the market, and 10x will give us a price of 180-ish. So could it go from 18 to 180 in the next 1 or 2 or 3 years? It definitely could. It just needs enough hype. But right now, just looking at the numbers, just being completely objective, there is no way that I would pay $18 for it just looking at the fundamentals. That doesn't mean I wouldn't take a swing trade, or a bit of a longer term swing trade maybe in it, just from the TPI, because it seems like it is a stock that has some very nice runs, so it would be possible to make 30 or 50 or 100% from it. But being a long-term holder of this, I think could end up being a losing position. Now, you're welcome to think I'm completely off here and completely wrong. I'm just saying that you need to have some astronomical growth rate in the earnings per share to justify a price right now around 18. Alright, that's all for now. If you have other suggestions, requests for stocks we should have a look at, feel free to write them in the comment section below. But until I post the next video, take care of yourself and your money out there, and I'll talk to you again shortly. Bye for now.